Excuse me. So I didn't mean to cough in the mic as soon as I came on. How are we all doing? Morning, Joe, Ian, Martin, Novelty, JC, Griggles, Lucas, Virginia, Evans, Evil, Peter. How are we doing? How are all you MT5 people holding up? God. Morning, Mark. So, if you're on MT5, hopefully they'll fix it soon. But if you're on MT4, just feel smug. Morning, Kennelly. Morning, Baggy. So yeah, MT5 released an update which broke everything last week. Indicators aren't working. EAs have all stopped working. Time frame changing. Work not working. Why keep developing that platform? Drop it. God's sake. Learn your lesson. You brought something out. It didn't work. Chuck it away. Focus on the thing that is amazing. Give up. Anyway. Morning, Great Phil. Morning, Lucas. Yeah. MT5 is hard life. Yes. I've just downloaded an MT5 terminal. This is how bad MT5 is, right? So this is my test MT5 terminal that I use. And this is on shift markets. If I go to the about, it's on build 4040 from October 2023. Yeah? That's not the latest build, is it? One came out last week, and there's been about 100 builds. But this is an automatic updating piece of software, MT5. You're forced to update it automatically. Yeah? So this is build 4040. I go to latest updates, check for updates, and it goes, you're on the latest release. No, I'm not. Even the software doesn't know what the latest release of itself is. That's how bad MT5 is. This, according to my terminal, is the latest version. I can't upgrade to the one that broke last week because it doesn't exist. This is the latest one from October last year. Scrap it, for Christ's sake. Just get rid of it. Admit you're wrong. Focus on what works. Anywho. Excuse me. Let's start off with the news. Morning, Neo. Morning, Mr. Lunary. Morning, Amy. So, today, no news. Flat. Totally nothing happening at all today. So, we'll just get whatever market the banks need to do to move the market. I wouldn't be surprised today if we see some movement on the Japanese yen as the market prepares itself for tomorrow's policy rate. So we've got the yen change coming up tomorrow morning. We're forecasting to stay the same, probably will stay the same. However, the press conference, the monetary policy statement and the outlook report might give us some clues as to when they are, if they are going to change those interest rates. So that's tomorrow. And then we've got CPI for New Zealand tomorrow evening. It's PMI day on Wednesday. Basically, main news Wednesday is obviously PMIs all day long, and then we're interrupted in the middle of it by the Canadian dollar rate at 245. This is 15 minutes after market open tomorrow. So the Canadian dollar will affect the US. So there's a good chance that we might get a lot of volatility around the open tomorrow. Quite possibly we'll sit sideways at the open. So I'm going to decide what to do on Wednesday because it's a bit of a funny news event, that 245. Going into Thursday, we've got the rate for the euro at 4.5. So second interest rate of the week is on Thursday for the euro. And then we've got unemployment and GDP for the US on Thursday as well. ECB press conference. And then Friday, we've got PCE. So 2 interest rates this week. We've also got the CPI figure for Japan coming out on Thursday, which doesn't tend to do an awful lot because they don't really use interest rates at the moment to control inflation. So we'll see what happens. MT4 is unfortunately slow often. Have I got speed up tricks? Yeah, use MT4. MT4 is literally 10 times faster than MT5. Let me go through a couple of the new features in MT5 that they released last week. 1, open your terminal. As you leave your terminal open, the chart updating gets slower and slower. So the new feature they released was load on processor and slower charting as you go through the day. Second feature, unable to download anything you've purchased from the marketplace because the marketplace purchases have all disappeared. So that's the second feature. Third feature, some people can download stuff from the marketplace. However, if you put it on your chart, it probably won't work. Fourth feature they introduced was switching timeframes, new feature. Put your indicator on the chart, switch time frame, it removes your indicator. The other feature they introduced was EAs being deactivated automatically when you update the terminal. So if you've got any EAs running that were trading for you, they automatically deactivate now. So it puts it into this new feature called manual mode where you have to manage all your positions. So those are the 5 new features that I've discovered in this update. All, as I'm sure you'll agree, fantastically useful for traders who need full automation and indicators to be able to do their jobs. MT4 is a million times faster than MT5. I've never had anybody that's ever said to me MT4 is slow. It's instant. I can't speed it up any more than it is because it is fast. No more features, please. Yeah, just don't use it, for Christ's sake. I've been saying it for 10 years, basically. So if they haven't fixed it in 10 years, they're not going to fix it, are they? It's broke. Right, so that was excuse me, news for the week. So today, I suspect we'll probably get some yen movement as the market sort of positions itself ready for tomorrow. Large explosion heard near industrial town in Iran's Semnan province. So stuff going on in Iran. Bank of Canada interest rates. Oh, Bank of China. Bank of Canada. Bank of China interest rates remain stable. I haven't had a chance to scan through the news this morning, so let me just quickly go through. An early sign of labour market could fall to price adjustment. March interest rate cut to nearly 40%. Okay, so they're dropping the chances of that March rate cut. That was it from Friday. So no real news over the weekend at all. Today is interest rates. Earnings fortnight starting. I'm not with it this morning. Excuse me. So today is the well, there's no actual releases today, but this week is the first week of interest rate changes. Stock earnings. Interest rates on the brain because we've got 2 interest rates this week. It's earnings fortnight. Kicks off tomorrow. Yeah. So we've got some big names in there. We've got Visa, we've got Netflix, we've got Procter & Gamble, General Electric, 3M, etc., etc. We've got Tesla coming out on Wednesday, Intel on Thursday, and Amex on Friday. And then we go into next week, which is the big one with Google, Microsoft, and everybody else, basically, Amazon, etc., etc., and then into the week after. So the next 3-4 weeks, starting from tomorrow, is earnings fortnight. So the stock indices will be very, very lively because obviously there's going to be a lot of movement in stocks. So they won't all move, but some of them will, and they will all trigger sector purchases. So, you know, things like Visa suddenly produce massive losses. They will anticipate MasterCard massive losses and banking sector losses, etc., etc. So there'll be stock purchasing and fluctuation. So, excuse me. So yeah, that's all happening this week. So we need to be prepared for that. Markets are open. FTSE long, DAX, nothing so far. The pre-market range for me is basically the 5-minute candle beforehand because we had a big sell candle go in 5 minutes before market open. So Friday for the UK indices or the European indices, nothing much happened. So we've got a gap up scenario, as you can see, on the DAX this morning. So we didn't do anything basically on Friday. We had a kind of, it was slightly bullish in the fact that obviously the candle looks a little bit like that on the daily chart. The FTSE, pretty much the same thing. We didn't go anywhere yesterday, so on Friday. So we'll see where we're going today, obviously with momentum, but we've got that last week's high and last week's low in, which are pretty obvious support resistance areas to head for. So we need to decide whether we are bull or bear at the moment. And the market doesn't really have any idea which way it's going at the minute. We are very, very sideways across all the European markets. So, but we're kind of elongated flagging at the moment, which kind of is indicative of a short. I mean, that's more of a pullback, to be honest. But so difficult to tell where we're going at the minute with any of these indices. We are still sort of pulling back on the massive rally that we had during December. The FTSE, as you can see, is pretty much returned to origin. So it's undone all of December's move in January so far. Not so with the DAX. So the DAX is a slightly more bullish. DAX is usually more bullish because it's got a lot more motor sector in it, which holds up very well across all market conditions because you have to have cars. So yeah, we'll see where we go today. But so far, very little volume. Looking at the FX side of things, excuse me, overnight, no movement. So there's no ADR hits so far today. We're very, very close on pound New Zealand to an ADR. In fact, we just missed it by literally a pip. So didn't quite get to it. So that's basically done its ADR already today, putting the entire range of Friday in reverse. So undone that Friday move. But apart from that, there's not masses that are particularly exciting at the moment. Pound looks quite weak this morning. Last couple of hours, not that bad, is it? So those are your ADRs. There aren't any this morning. Weekly ranges, nothing. We've gone through the monthlies already, but there's a few monthlies there which we've hit the monthly ranges on. Pound yen being one that we've exceeded it by 125. So yeah, not a lot really to look at there at the moment. RSIs, we're flat on the hourlies. So we had quite a lot of activity obviously last week, so got into quite a good number of trades last week. Good exposure on at the moment, so hopefully we get some movement to undo some of this week. 4-hour RSIs, you've got CAD Swiss at the moment, which is still extended. Very nice long run all last week, especially the tail end of last week. Absolutely flat out all the way up. So that's looking good at the minute. For a pullback, we're extended above the 80 level. We should be pulling back into either that area, or that area, somewhere in that region. We've got a lovely resistance coming up here. Look, yeah. So this area has been rejected over and over and over again, which is the 72 moving average. So where we are right now today, good looking short. Whether or not this is going to be a continuation short, we'll have to wait and see. Bear in mind, this week we've got the Canadian interest rates. So highly unlikely we're going to change. So interest rates across the board. When's the interest rate? Thursday, isn't it? CAD? No, Wednesday, CAD. Yeah, so Wednesday is the CAD. Forecast is as expected, which we should probably get. So no country is changing their interest rates at the moment. No country is forecasting changing their interest rates this side of spring. So January, February, then into March. March is when there's possibilities. It's a long time, 2 months. A lot can change in 2 months. Conflicts can escalate. All sorts of things can happen. So we've got 2 CPI figures before we get to March. Yeah, there's all sorts of things that can change whether or not these interest rates go up or down. But at the moment, we are flat. We are forecasting to stay flat until March, April at least, across the board, apart from possibly Japan. So that Canadian rate coming out as a 0 won't be a shock to the market. Whether or not they decide they want to continue buying the CAD will depend on what the monetary policy statement says. So with every release, we get the monetary statement, and then we obviously get the press conference usually after, and that is when we'll find out what's going on. So really no idea what to do with the CAD. It will go probably one way or the other on Wednesday. But at the moment, massively extended to the upside. You've also got a monthly resistance coming up if this resistance that we've identified already, which is within ADR today, doesn't hold. This high of last week could hold, and we could just pull back on it this week. So we'll see. So that's nicely extended on the 4 hour. CAD yen's extended. All these yens are extended because of last week's weakness in the yen. Euro Swiss, same sort of thing to the CAD Swiss. We've had a really weak Swiss franc. That Canadian dollar's obviously been rallying against it, so is the euro. So everything's been rallying against the Swiss. You can see the pound Swiss is extended as well. The Swissy is one of those currencies that moves in waves. If we get any kind of conflict, escalation, or anything like that, the Swiss franc will rally like crazy. Everything will come down against it. It doesn't matter how strong your currency is. If they buy the Swissy, they will pull money out of every currency and put it into the Swissy as a safe haven. We are just tapping on this one into a monthly high as well. So you've got lovely confluence. That's a monthly low, actually. Sorry, that's 2 months low. That's November low. So we're tapping into the November low at the moment, which is there, which is an area we struggled at previously. Pushed above it, hovered about it, pushed down. So this is the first retest of that level we got to last week. So I'm in short on this already on the H1M5 mean reversion, looking for a pushback down into that propulsion. Nicely extended. And the pound Swiss. Again, very nicely extended. All the pound looking for a pushback there. So there's your RSIs. Not a lot else to look at really today on that respect. Short on the DAX. I've decided our coughing. Sorry. I'm coughing. I've got that 100-day cough, unfortunately. Morning, Astro. Morning, it's time. Everyone, press the like button to support my channel now. Thank you. If you could, that'd be lovely. What was I going to say? Yeah, so I've decided to dump DARWINX as my index broker. I've done some analysis on this month so far. I'm getting very close to margin calls all the time with DARWINX. 1 to 30 is not enough to trade indices. Not with this strategy. It is absolutely fine. If you're using a stop loss based strategy, it's no problem at all. If you're not trading a portfolio of indices together, it's no problem at all. The way that I'm trading with 3 indices and 2 indices at a time with hedging strategy, I'm getting close to margin calls on any time we get multiple hedges. Friday was a prime example. We have multiple hedges Friday in the afternoon and the market rallied like loony. I got into shorts at ADR and basically it still pushed away and went 125 ADR. So I took a loss on Friday, but also that takes me very close to margin call when I'm that much short in as I was on Friday. And if it's a margin call, it shuts. So I've decided I'm not going to use DARWINX. So I've pulled the money out of the US account and I've transferred it back into my bank for the moment. I'm going to put it back into Forex, which is a pain because it takes about 3 or 4 days to get money transfer between brokers done. So this afternoon, I haven't actually thought what I'm going to do this afternoon yet. I've got some money in my Forex account, so I can probably transfer that into another account just for this afternoon. So I was just thinking out loud then, I wasn't sure where my money was, which is worrying. Excuse me. Cough's worse today. It's always on a Monday for some reason. So I did a little analysis on the month so far on DARWINX for the European. I'm down 1,600 on the FTSE. This is my first month actually actively trading the FTSE with stock index hedge. Up nicely on the DAX. So not only is the FTSE, and this is what I thought last year, if you remember last year when we were I was looking to trade the FTSE because I wanted to try it. I have traded the FTSE on prop and I wasn't profitable. So I know it's only like 20 days worth of data. It's not enough, but it's also not profitable on the live account either. So I'm not going to worry about the FTSE and trading the FTSE. I'm just going to stick with the DAX in the mornings. And basically what I've decided to do is instead of holding the DAX until the New York Open, if it's hedged, I'm going to hold the DAX till end of day. And I'm going to treat it like a normal instrument that I'm going to carry on trading through the US session. So, because it does move in the US session. Look. Sometimes it does, sometimes it doesn't. Yeah, I mean, that's the US session on Wednesday last week. That's the US session on Thursday and Friday. So, yeah, Tuesday didn't move during the US session. Monday didn't move during the US session. So it's hit and miss. So if I'm hedged, there's no point in closing out the loss there. If it's just a hedge, I might as well just see if there's an opportunity to get out in the afternoon. So I will trade that in the afternoon, which means I can go back to just trading on Robo Forex. The downside to that, obviously, is the execution on Robo Forex is nowhere near as good as Darwin X. So it's proving a tricky strategy to trade at the moment. So I just want to update you on that. Excuse me. Really bad this morning. I haven't talked this much in a while. So MQL's policy is disgusting. Every avionic in an airplane uses crossfill as redundancy. I'm not sure what's got to do with trading, but I'll believe you. I don't know what that is. But yes, I agree. MQL's policy is disgusting, especially with MT5, with forcing you to upgrade things that you don't want to upgrade, which is why it goes wrong. Morning, Gregors. Oh, you've lied. Sorry, yeah. Thanks, Gregors. Morning ago, sir. Yeah, so if you missed the beginning of the stream and you're on MT5, sorry about that. Nothing to do with me, but sorry about that. Now you know why I don't use MT5. You can't trade because it's broken again. So, yes. MT4. Think of MT5, right? If you've bought indicators and EAs for MT5 from me or from anybody else, just think of it like part of your education. You learned a lesson. It cost you whatever you spent in MT5 indicators and EAs, but chuck them away, buy them again for MT4. You've learned that lesson. Reinvest in a platform that works and has worked for 15 years, very stably, very fast, no problems whatsoever, and just don't use MT5 anymore. I can't withdraw my products from MT5. I was going to do that. I've just discovered I can't really do that because people that have got it have to have them available because they bought them. So if I take them away from sale, you won't be able to re-download your products. So unfortunately, I'm stuck supporting a platform that's broken and everybody accusing me of my indicators and EAs being broken when in fact the platform's broken. I can't do anything about it apart from have people rant and rave and get cross at me. So I'd much rather just remove them from sale and say, yeah, no problem, but I can't. I've kind of dug my hole and I have to stay with it now. Anyway. What website do I use for stock earnings? It's Interactive Investor, ii.co.uk. Link in the chat. It's just so that I know what's coming up. It's more of a, I mean, you've no idea. I mean, none of this is going to help me trade in any way, shape, or form. It's a kind of, you need to be aware of it because it's the same as the financial reduced calendar, basically. It stops you going, oh, why did the Dow move 250 points at the open? Oh, that's weird. That's why the Dow moved. I was expecting the Dow to move because loads of massive companies produce their earnings. Netflix, which index are they in? Yeah, so it's just a case of, Netflix is in the NASDAQ. So on Tuesday, or rather Wednesday, because it's a post-market, this one, we're going to see some movement in the NASDAQ because Netflix has released its earnings. So it's just a case of being aware of. It doesn't help you pick a direction or anything like that. It just makes you aware that there's volatility coming in. Yeah, volatility is good, makes us money. Volatility is also bad because it can whipsaw the market as well. So it's just, so you know what's coming up. Like next Tuesday, 30th, end of the month, massive. We got Microsoft and Google and AMD aftermarket. Yeah, so Wednesday open is going to be busy because everybody that wants to buy and sell these stocks can't because they release it after the market shuts on Tuesday, so you can't buy them until Wednesday. Most people can't. Obviously, if you're trading Globex, you can. Banks and institutions can, but we Hedged on the DAX. Clean break on the FTSE. So DAX hedge target, very easy. It's going to be that high from last Monday. So just moving my target down, just inside last week's high. That's my upside target. Downside target, if it did break down, obviously the gap is going to be your first port of call. If it's going to remain bull and it does want to go down, we'd be looking for a gap fill. Other than that, the low there from the session, from the New York session on Thursday and Friday's low is obvious support to the downside. So I'm quite happy to leave that 5R there. And obviously if it triggers that, and then we'd look for some kind of bounce out at some point. So upside just under the high of last week, downside Friday low, somewhere around about. Excuse me. It's bad and tickly this morning. Avionics crossfill to legacy mode when there is a problem. You're talking Japanese. Unless you're a pilot, no one knows what you're talking about, FTNet. If there's a problem, use a parachute. Can you recommend anyone swap-free spread betting broker? No, don't exist. It's a myth, Jam. Go and look into it. Icy markets. It's a myth. Swap free. Yeah. So no swaps or interest adjustments. Wow. You mean I don't have to pay the overnight swap that eats up 10% of my profit each month? That's fantastic. Oh, you've got overnight financing charges, which are going to cost me $9 per lot per night? You cannot trade for free. There is a cost of doing business in trading. This is it. Swaps. Spread. Commission. You have to pay them. There is no way around it. Yeah. If they do not charge you a swap, that's great. But if they do not charge you a swap, they charge you a financing charge or whatever they call it, an administration fee. It's basically to get around the laws in Islamic religion. You're not allowed to gamble, right? It's something to do with borrowing money. I don't know what it is. Doesn't matter, does it? Basically, they're not going to go, oh, all right, just because you're a Muslim, you don't have to pay the overnight swaps. We won't, as a business, make money out of you. That's not going to happen. They get charged interest on your overnight loan, on the swap, on your FX conversion. They have to pay that, and they have to pass it on. Yeah, so there is no such thing as a swap-free account. Somebody said to me the other week, because I was moaning about the swaps on the US dollar yen pairs, and on the yen pairs in general. You look at the yen pairs I'm in, US dollar yen, some of these swaps are huge. They said, why don't you get a swap-free account? Like, well, I can, but they're still going to charge me $9 a night to hold the thing. So I've paid $41 on this. How many lots have I got on this at the moment? I got one lot on. So it's going to cost me $9 a night to hold it. Just over, about $9, I call it $10 a night to hold it. Nothing's changed. It's just a different way of charging for the same thing. It's like spread betting. You don't pay commission. Fantastic. What do? You pay a spread twice as big as everybody else's. They charge you in some other way. There's always a way of getting money out of you. Nothing is free in this game. Brokers make the money. Lee, try crushed ginger mixed with raw honey. Will take care of the lingering cough. It's bacterial, basically. It's this thing called the 100-day. Is it called the 100-day cough? Yeah, it's kind of like whooping cough, or pertussis. It's going around massively at the moment in my area. I don't know about the rest of the UK, but it's in my exercise class, put it this way, there's two people that haven't got it. It's just everybody's got it. Nothing, cough medicine doesn't work. The normal remedies you take like ginger and honey, nothing works because it's coming from here and it's tickling here and nothing does anything with it. It's an antibiotic thing. So I'm going to give it another 3 or 4 days and then I'm going to find a doctor and get some antibiotics, basically. Is the FTSE in Robo Forex? No. This is why I'm trading Darwin-X, because I wanted to trade the FTSE and it wasn't allowed. It wasn't available. So I went hunting for a break. Oh, I didn't go hunting because I've had Darwin-X accounts for years. So I just switched to Darwin-X basically to trade FTSE, but I'm not that bothered, to be honest. You're treating basically when you're trading stock index hedge or ORB, if you want to do it, you can. It's the same principle. You should be using the stock indices as a portfolio approach, the same as you do with everything. So, like this morning, the FTSE's rallied nicely, and if that hits target, it pays for the DAX. If I remove the FTSE and the DAX hedges, all that I'm looking at is this afternoon, one of the indices in the US to pay for the DAX. It doesn't matter. It's just you're adding another risk element into your portfolio. I don't need it because I've got 3 other instruments in the afternoon. And I'm also thinking of dropping the Dow. My analysis of last year and so far this year on the Dow is not good. So far this year, the Dow has ruined my month. I've done 2.5K on the NASDAQ, 1,500 on the FTSE, and negative 271 on the Dow. I know things go in fits and starts, which is, understandable, but the Dow is the one at the moment which what I'm finding with the Dow is it either goes at the open, it either goes boing and you're at target, or it doesn't. And if it doesn't do that, it doesn't work. It hedges or it flip-flops about. So I'm thinking of dropping the Dow as well and using the FTSE, the S&P and the NASDAQ, because the Dow just seems to be more problematic to me at the moment. And looking at last year as well, my trading results from last year, the Dow was the least profitable out of the US indices. So removing that from the equation and the FTSE brings me down to 3 indices. 2 clean breaks, you're in profit. 3 clean breaks, you're clearing up. 3 hedges, as we know from last week, because I had multiple triple hedges, they all worked apart from 1 day on Friday. So I might drop the Dow as well, but I'm going to carry on trading it for this month. Pulling back on the FTSE and the DAX at the moment. The only way around it is to use something like XM and have 500k in your account, so they let you have 1 to 500 and swap free. I don't know. I don't know anybody that's got 500k to trade with. So you're talking about a very small minority of retail traders there at AZ that have got $500,000. If you've got $500,000 as a retail trader, you're a professional. You'd probably class as a professional, in which case then you'll have a different account totally with the broker anyway. In fact, you probably wouldn't be using a broker in the normal sense. You'd be using someone different. But you can get 1 to 500 loads of places. But the swap free part, it's not. There's always a fee. It doesn't matter. If they say we're not going to do swaps, and we're also going to reduce the amount of we're going to charge you have something overnight, but it's going to be absolutely tiny. You'll find that your commissions will be larger than other brokers, or your spread will be slightly wider than other brokers. They will always make that money some way. There's always a way to make the money. They do. In Islam, you are not allowed to take or pay interest charges. Yeah, exactly. Okay, yeah. Yeah, I know it's something to do with gambling as well. It said on one of the sites I was looking, because I was reading up on it the other day when somebody said about it. And one of the brokers I was reading their Islamic account, and it said something about gambling on there as well. But it doesn't really matter, does it? At the end of the day, it's a myth. We got it in Australia. The coughing thing, yeah. I think a lot of countries have got it. Gosh, really bad today. I'm noticing it a lot more. It does come in. It's one of those things that comes and goes as well. You feel okay for a few days, and all of a sudden it comes back, and then it disappears again, and then it comes back again, and it's just weird. 98 visitors today. The liking seems to be working. 98 people in here. Let's just check how many likes we got, and then I will go on and do the FX analysis and stop waffling on. So we got 47 likes from 98. That's not bad, people. Half of you don't like me. That's not bad. I'm happy. I'll take that. Right. While we're waiting for those to move, I'm going to whiz through all the accounts and have a look at the FX side of things. So no ADRs, done the RSIs. Friday banked 0.5%, sitting at 8% on H1M5. The main culprit, obviously, as we know, is the pound yen. So pound yen, basically, that's the pound Swiss. Pound yen, I took an aggressive last week, which failed. And I took a second aggressive on the push on Friday, which worked beautifully. We've pushed into propulsion, and so far today, the propulsion gap is holding. So fingers crossed we can come and retest that low from Thursday or Friday, at least by tomorrow. And as you can see, I've got the stop loss at break even again. So on that account, on that aggressive drawdown control position. So I can't lose that aggressive position. It's on. But that's the main thing in drawdown. Everything else is absolutely fine. There's nothing in 1% of drawdown at all. It's just normal business as usual, waiting for the market to move. So pound yen and US yen are the only two problems at the moment. US yen and pound yen will both play out tomorrow. So whatever happens tomorrow, we'll know about it and I'll be able to deal with it. Tomorrow's a bit make or break for the month, really. But anyway, excuse me, we will see. Virginia, Amy, is Islam usuri not allowed? I don't know what you guys are talking about, so you carry on talking. I don't know what any of that means. I don't do religion. Right, H1M5. So yeah, up 2.6% on the month. Not great month. As we know, the first 2 weeks of January, nothing moved. So it's very difficult to make money when nothing's moving. So it's going to be a weak month, which I kind of was anticipating anyway. So ADR reversals banked 1.19% on Friday. That's up 3% on the month, which is good. Don't need the target. 500 just so it goes away. I don't use the profit plus column, so it's just annoying having the number there. So yeah, 10% of drawdown on that. There's a few things, excuse me, on the ADR reversals, which are not uncomfortable, but they're squeezing a little. Pound yen obviously being one of them on that one as well. But pound New Zealand dollar CAD, that hasn't stopped dropping. This Canadian dollar rally, look at it. Look at the market structure on this. It's absolutely textbook. High, low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Not quite, double bottom. Lower low, lower high, lower low, lower high, lower low, lower high, lower low. It's just the most textbook trend I've ever seen in my life. If you want to take a screenshot of market structure, there it is. So this is still pushing down. The New Zealand dollar isn't responsible for this. It's the Canadian, as you can see. So we've got that news coming out with the interest rates this week. So I'm really, really hoping that Canadian weakens off of those interest rates to give this a little bit of a chance to rally back. But as you can see, it's very, very, very orderly, this move. There's no reason for the market to profit take this. They're profit taking along the way constantly. Yeah, it's up, down, up, down. There's nobody massively short New Zealand dollar CAD. They're short it, we know that, but not massively because they've been taking profit along the way. So as you can see, the RSI, no extensions whatsoever. So the initial entry that I got on this was all the way back right at the beginning of the month, which was that one. Oh, this is an ADR reversal, sorry. It was that ADR there. So we had an ADR hit to the downside, double bottom bounce. Didn't take profit. Paying for it now, basically. So this one's a little bit squeezed. I'm going to give it until Wednesday. We'll probably get to 3.5%, maybe 4% drawdown on that and see what happens. Other than that, everything's kind of all right. But a few of these CAD pairs, CAD Swiss being another one, look, obviously pushing hard. But look at where my average is. I literally need one day, one ADR day and I'm out. So it's not the end of the world. So yeah, banked 3% on that account. 3% banked roughly just under on H1 hedging. I've got another 0.25% to bank on the shorts there as well. Look. Target's that low. I'm going to let that run down to target. So yeah, there's nothing particularly worrying at all there. New Zealand dollar CAD again. And pound New Zealand. So yeah, it's all working out fine. No massive drawdown yet. So I've banked 10% roughly, but obviously got a fair bit of drawdown at the moment to look after. If we look at the pairs individually, excuse me, let me just check the indices. Oh, Christ's sake. Hedged on the FTSE as well. So target to the downside on the FTSE is Friday low. About 4R. That's also a monthly level. That is the low from December. Yeah, so this is the December low, which we bought up on Friday. So if we do get back down to there, I'll be looking for a double bottom bounce on the December low. Contracting at the moment, so I'm not sure it's going to get down there. Upside target. Difficult. I kind of want to say Friday high. That's a bit close. I'm just going to leave it at 5R for the minute. So we've got this little accumulation. So actually, probably the best thing to do, I'm going to move it down into this accumulation, this propulsion gap here. So this is the open, or rather the close from, where are we? Friday, Thursday, Wednesday, Tuesday. So that's Tuesday's close. Obviously, a lot of this movement here is overnight candles, but that's where we opened. So we haven't actually done that gap fill yet. So there's a gap from where the market actually opened on Tuesday last week. Sorry, Wednesday. And we haven't actually come back and filled that yet. So if we push up, we're probably going to get some rejection out of that gap. And it's just shy of 5R. So it looks like it's 4R to the upside and 4R to the downside today. 4.5R. And obviously that one I'll leave in place. So hedged on both today. We'll see where we go. AZ, I'm a Muslim, so I have to have the Islamic account regardless. It's a flat holding fee instead of variable swap. Yeah, so that's the only advantage to it, I guess, is you're not, you know what you're paying every night, don't you? So if it's $9 a night and it's triple swaps on a Wednesday, you know you've got 1, 2, 3, 4, 5, 6, 7 times 9. So 63, 64, whatever that is. Can't work it out of my head. 60 something dollars or pounds or whatever it is a week to hold an instrument. If you've got one lot on, obviously that is. So, but compared to a regular swap, the regular swap is calculated on the differential between interest rates. So if you are, and this is why some things are more expensive to trade than others. So if you look at things like the yen, and this is why the yen pairs are so expensive at the moment. They're not always this expensive. It's only coming to fruition in the last 18 months because now the differential is 5.1. So the difference between the Canadian interest rate and the Japanese interest rate is now 5.1%. So that's what you're paying as an overnight swap. Differentials. That's how it's calculated. So it's only this year, really, it's become incredibly expensive to trade a lot of this stuff. So the closer they are together, if you look at the swap between a New Zealand dollar, US dollar, see if I've got a New Zealand dollar, US dollar trade on. Have I got one on there? Yeah. So you look at the New Zealand dollar, US dollar. There. Look at the swap on that. I've been holding that since the 16th. $3.24. You look at the US dollar yen swap that I've been holding since beginning of January. It's $46. Because it's a yen. Just, nothing you do about it. It's just one of those things that be interesting to know if there's if you actually have a differential between. But I'm assuming I'm assuming that they change these fees on a regular basis because obviously they've got to change these based on what the interest rates are doing. So every time there's an interest rate change, I assume your charge per lot changes. Does it? Might be able to confirm that easy at some point. Yeah. Oh no, Wednesday or Friday night, depending on the trading instrument. Yeah. I assume that they will change these figures on a regular basis. It's extortion, pretty much. They charge a lot more than what it costs to cover the swap. So, in fact, those swap-free accounts aren't as good as swap accounts, basically is what you're saying. I've never looked into them in any shape or form because I knew that there weren't a way of saving money. There's no point in looking at it because it's not going to help you. If they turned out to be lower charges than regular swaps, then yeah, it's worth pursuing, isn't it? But I don't know they are. Paying a lot more than what the swap would have cost you, yeah. It's religion versus finances, isn't it? Nothing you can do about it. If your religion says you can't, you can't. Job done. Right, Aussie dollar CAD. So looking at the Australian pairs, I'm going to whiz through all the pairs quickly, not going to hang around on them, just going to whiz through them on the H1M5 account, just to see where we are with everything, basically, and what's going on. So starting with the Aussies, Canadian dollar, obviously we've got news coming out this week on Wednesday, so this is going to do that or that, depending on what happens with the interest rates, or potentially it's just going to do that. If nothing happens with it and the market has no bias either way. So the minute, obviously, we were in the middle of a breakdown. We've come back up and just not really retested on Friday, but we've kind of tried to retest that level. This is more where we broke rather than that, which is just a news wick. So there's more upside, I think, on this if we are going to retest and continue to drop down, but that will be decided on Wednesday with that one. And as you can see, it's been absolutely sideways for ages, couple of days of movement, sideways for ages, couple of days movement. This is exactly what we're having in these markets at the moment. It's incredibly hard to trade because you are either getting a couple of days of movement where you take profit, or you're getting a couple of days of movement where you're going to draw down and then you are stuck. You're literally stuck there as long as the market wants to stay there. So we're moving from balance, imbalance, balance, imbalance, balance. That's all we're doing. We're moving from balance to balance, but with no continuation or structure of any kind. So tough month this month for position trading. Tough month for, obviously, if you're a trend trader, you're dead. If you're a mean reversion trader and you're not trading ranges, you're dead. So, you know, it's just one of those months. You just got to get through it and get on to next month, or wait for them to move, basically, which could be spring. Anyway, so yeah, Aussie dollar CAD. So that's pushed down at the moment, as we can see. So I've got one on this from the H1 M5 mean reversion entry on Friday. Sorry, not on Friday, on Wednesday last week, as we broke down. Looking for a pushback on that move a little bit further. Didn't get out there. My target is basically here, as you can see. It's this level. So I'm looking for basically this market reversal alert that we got here and the retest. I'm looking for that to hold and just put another leg in. And then obviously if it wants to continue down, fine. But I just want another leg up. Aussie dollar Swiss franc, we know absolutely on the floor at the moment. Well, I say on the floor. It's had a day of movement, but most of the other Swiss pairs obviously had a bit bigger, stronger move against them. Again, total nothing. So we had total nothing for ages. We had a little bit of movement, some volatility came in, and then total nothing. So all we've done is we've had a price discovery to the downside, rejected that, pushed back up. This is a lovely wick-off spring, look. Very big spring, but there's your accumulation, and that should break, potentially, if it's a wick-off. But it might not be. I don't know. Anyway, coming down at the moment, I'm short. Looking for a target at ADR. Just coming down into the middle of this range, which is a pullback on that leg there. So Swiss franc waiting for some movement. There's no news catalyst for the Swiss this week. What have we got for the euro? We've got PMIs, obviously. Oh, yeah, we've got the rate. Of course we have. So again, Swiss franc moves with the euro. We got the rate. That's not changing. That's coming out at 4.5. Lagarde has said it. If they do, the market will be very, 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 very cross with Lagarde. Probably should have a hit put out on her or something. But it's not going to move this week. So we'll get some volatility. So we've got the press conference as well this week. So there's a good chance we get some volatility, which will affect the Swiss franc. If it all kicks off in the Middle East, everything's coming down against the Swiss franc as well. So it's not really a bad thing being short against the Swissy at the minute. Aussie dollar yen, totally sideways. No movement whatsoever. We are ever so slightly in an upward wedge. Got some nice resistance coming up at the upside, but overall, we want to do that because they are going to increase the interest rates on the yen. They've said. Whether they do or not is another matter, but they've said they are, which means you want to be shorting everything against the yen long term. Double topping at the moment, but hasn't gone anywhere. No RSI extensions that I've managed to get into apart from that one there, which has played out, that one there, which has played out. So nothing at the minute. Aussie, New Zealand, very, very sideways as well. This is a big range that we're in at the moment. This one's actually moving fairly nicely up and down, but not with any strength, as you can see. I haven't had any trades on it. There hasn't been any RSI extensions. We got close on Friday after that 2 ADR push, but couldn't get in. Aussie, New Zealand, I'm probably short. Yeah, I'll be short on ADR because we had an ADR on it on the Thursday. So there was an ADR hit there, short. Then it was another ADR hit, short. Just came and tapped my average and used it as support today, which is nice. So looking to get back inside that range, basically. So I'm hoping that M pattern reversal there is going to happen. So there's a reversal alert, looking for a retest. So keep that higher high intact, and then rally down. But yeah, that's moving quite nicely. We've got some good support coming up from 3 weeks ago, which is the high of January. So this is where we started. Obviously, we came and filled the gap. So we've got a nice resistance coming up there, and that's the December high as well. So there's two good resistance at 100 and 125 ADR. So if that pushes up there, I'll take a short on that on the H1M5. Aussie US, long on this one, 2 positions on from last week. First one there when we got extended. We stayed extended and embedded for 2 days. We're just kind of flagging. So this got into profit and nearly hit my target this morning, but it's pushing back down again now, which is annoying. But yeah, looking for it to come back up and retest this propulsion gap, which is this low here. So this is the break of that range. So we should be looking for it to retest that, hopefully, and then drop, which is a 50% retracement on that leg. CAD Swiss, again, short with this one. So I'm short most of the stuff with the Swissy at the moment. We're sitting in this propulsion, which is holding at the moment. We've got that high there coming up within ADR today as well. So there'll probably be limit orders triggering at that area. So looking for an exit on this one. 175 ADR is the monthly high of that accumulation. So yeah, this is just undoing that move a minute. So just sit in the middle of nowhere, aren't we? Really nice rally from last week. So looking for a mean reversion on that move there. Just the one position on at the moment. So target's a bit optimistic, I think. Just moving my target up to 150 ADR. It's kind of where that rally started from Thursday, which is the breakout of that high. We tried, failed. So all the breakout traders got stopped out. All the false breakout traders are dead. We cannot test these highs. So CAD yen, again, all the yen pairs are very much the same. Very, very weak yen at the moment. The one we need to focus on, so I'll whiz through all the yen pairs. So we've got resistance coming up, potentially monthly high from December coming up. So that is a good point where we're going to find some kind of limit order trigger. That leg there, we haven't had a pullback on, so we'd be looking for a good retracement on that. So if you want to short that, haven't had an entry on it. Look how close the entries have been. So there was one there. That was 21st of November, so that would have been on the other account. So I would have taken that one. Just missed it there. Just missed it there. Just missed it there. Just missed it there, although that was just a flag. So you'd be coming up for second position if you got in on that. But yeah, nice double top for a short opportunity on the CAD yen. Swiss yen, totally sideways. So remember, I keep saying about weakness, and what we're looking at is just the differential between the weakness and strength of these two, which is why we use the relative strength indicator between the two currencies. So we've had a very, very weak Swiss franc last week, a very, very weak yen last week. What does that give us on the Swiss yen? Nothing, because they're both weak. Therefore, neither of them goes up, neither of them goes down. They're both going down at the same time, which means that neither of them has an advantage. That's why you get a range. So that's going nowhere. We're waiting for one of those to pop. That one is tomorrow. That one is on Thursday with potentially the euro. So good volatility on this one this week. Right now, it's bang in the middle of nowhere. So flip a coin, one way or the other. Euro yen push at the moment. Euro's had a fairly good, strong week, and obviously the yen as well. A couple of positions on this one off the RSI extensions. That one there, and that one there. One in, one out. That was 2 in, 1 out, and a 1 in, 1 out. But yeah, 2 nice trades on that. But no other opportunities at the moment. Just kind of gone sideways for the last couple of days, which you would expect. So the market tends to go into a range ahead of a large news event, and obviously the yen is tomorrow. So not likely to get. We're either going to get large movement today as the market positions itself ready for tomorrow, or gets out of positions ready for tomorrow, or we're just going to do that. So you can never tell. It's either a flat line or it's loads of movement. Pound yen, I've got multiple shorts on this one. So this pound rallied as the yen weakened, which obviously you can see that's the outcome when you get a strong currency against a weak currency. You get double the amount of movement. So had the first mean reversion entry on this, and then we looked at a bounce out of there. We just got an accumulation. So this is kind of what I just said about this morning. We had these multi-day pushes, sit sideways, do nothing. That's all we're getting at the moment. Lovely head and shoulders there, look. Right shoulder. And that is also a monthly high. We've just tapped straight into monthly high. Limit orders have triggered on Friday, rammed it straight back down again. So tomorrow is the key for this one. New Zealand dollar yen, very much the same, sideways. This is contracting a lot. So we're looking, getting ready for a breakout on this. Look, pop one way or the other. But sideways at the moment, no RSI extensions, and the US dollar yen. So this is the one we're focused on all the time with the yen. This 150 level is the line in the sand. The Japanese, every time we get anywhere near this level, the Japanese talk about an intervention move and just rallying it like crazy. Usually either the market listens and stops pushing against the yen, i.e. they start just to buy the yen up, or the Japanese isolate or liquidate all their overseas assets and put it into the yen, and the yen drops by 400 to 800%, or rallies 400 to 800%, dropping everything against it. So we've had a nice run on this all month so far. Personally, I think we are just pulling back on down legs at the moment because what they said about those interest rate changes. So I suspect everything will come down against the yen. And it could be tomorrow. It could be that they say very little and we just sort of flip-flop around again for another month. We don't know. But I'm hoping Ueda and Suzuki and that are just going to come out tomorrow and just say interest rates changing. But I'm not holding that much hope. We've had nothing. We've had radio silence on this interest rate change since before Christmas, since they announced it, basically. They've been very quiet. So not sure it was meant to be leaked, to be honest, but they did. 1 hour to the downside on the DAX and on the FTSE. So very little movement this morning. So that's all the end. So this is the one we're watching. If there's any kind of rally on the US or the Canadian dollar this week that drives this US up, and there's any kind of weakness continuation off of last week's weakness in the yen, we're going to find ourselves very, very quickly at that 150. I'm just going to draw that 150 on so you can see it. Yeah, so that is the point at which the Japanese start moaning. Yeah. You notice that last year, when we were approaching the 150 level, the 145 level, wasn't it, last year? When we were approaching the 145 level last year, which just so happens to be roughly where my average is. That's 145, but there. We got all the, we are not happy, we're going to intervene, all this sort of stuff. Yeah. Market reacted. We got back up. Yeah. We had multiple intervention moves. Yeah. That was the last one at exactly 150. Yeah. So we got to the 150. We had an intervention. We got approaching the 150. We had a second intervention. The interventions failed, but the market was exhausted by it and obviously had to turn around and rally anyway. So we're approaching this level. We got to 145, yeah, at the beginning of January. Notice we haven't had a peep out of the Japanese. We're now approaching 150, not a peep. What happens when we start getting to these levels normally? Every day or every other day, we get Suzuka, Ueda, or someone from the Japanese finance department saying, we are watching closely FX movement. We are FX movements that are substantial are undesirable. Blah, 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 blah. All the usual pre-intervention talk. Dead. Nothing. What does that tell you? They don't care. Why? Because they're going to change their interest rates. So I think there's a good probability that is going to happen in the next couple of months because they're not complaining about it. They're not worried about it as if they're just sitting there going, yeah, bring it on. Get up to 150. See what happens when we change the interest rates. So we'll see. But at the moment, this is the one we want to keep our eye on because this is the one that triggers it because all the US, Japanese imports and exports are done in the US dollar. So it's in their interest to keep this thing as low as possible against the yen. So all these other yens that are rallying at the moment, obviously this is rallying because the pound is fairly decent at the moment and we've got a weak yen. It's not going to matter how strong that pound is when that yen move happens. It's down there. So I'm not really worried about these at the minute, hence having some targets which are like 300 to 400 ADR away. I think there's a good chance of getting back there. But knowing me, as we're within an ADR, if we can get down to there, I shall be out the lot. Just in case. The Japanese are also renowned for not doing what they say. So you have to bear that in mind as well. We'll see what happens. Excuse me, just have a drink. Again, I was watching on Bloomberg, and apparently in Japan, regular trading floors are back where they shout across the room and use binoculars. Really? It probably keeps them exercised, because, you know, they love exercise. So shouting and screaming is probably their way of exercising while they're trading. I don't know. Not sure how you would go back to it. They're one of the most technologically advanced civilizations on the planet. Going back to open outcry in pits seems a bit backward, doesn't it? But we'll see. I'm watching a program at the moment on, I can't remember what channel it is, but it's called Around the World in 80 Ways. And it's about a load of obese people that are traveling around the world, experiencing other cultures and foods to see how it's impacting obesity and stuff. And they were in Japan on the first episode. Only 4% of the Japanese population are overweight. 4%. Yeah. Sumo wrestlers. That's it. And basically, they're showing that they are so regimented. Like every school, every workplace, in the morning, you're in there and you have to do an exercise class, group exercise class before work. They make sure. And obviously, they eat fish. They eat very minimal carbs. They eat rice, obviously, but fish and everything that is not carb heavy that makes you bloated and fat. That's why. And it's just incredible to see the the difference in their culture and the way that they do things. And that's why they are so good at what they do, because they are so laser focused on everything. Finance, however, not one of their strong points. They're not very good at their currency. So we will see. CAD Swiss ADR, RSI rather. So there's an hourly on the CAD Swiss. So more movement on the Canadian dollar this morning. Not a lot. So that's an hourly RSI. Just triggered back up there. Divergence. Oh, the other thing as well about that Japanese, you have to go, every business organization has got a in-house doctor, and you have to go for a regular checkup with your doctor where they get a tape measure and they measure your biceps, they measure your chest, and they measure your stomach. And if you are starting to get a little overweight, you get reprimanded. So not only do they make you exercise in the morning, they monitor your weight. There you go. So if you want to be fat in Japan, go work for yourself. Be your own boss. Euros. Just got out the Euro odd on Friday. That's the H1M5 mean reversion. Nice 2-day in-out done. So no extensions on that one at the moment. We're just returning back up to a 68 or 71 retracement out of that propulsion gap at the moment. So it's whether or not we're going to get strength or weakness moving forward on the euro. The Australian dollar is really neutral at the moment, so we're looking at the euro for direction really here. Obviously, we're expecting it to come down. We're expecting interest rates to drop. Lagarde has said as such, and obviously Thursday we've got the rate announcement for the euro and the press conference. So that's where we're going to find out forward guidance. 1:45 on Thursday afternoon. Lagarde will lay out their plans basically for the euro. They may well be a little bit more accurate with when they are going to reduce rates. If they are, I mean, it's not in their interest to do so because obviously it will weaken the euro. But if they can give us some guidance as to March or April, then we'll probably find a euro drop on Thursday, but depends what they say. So this to me, I think, is probably pullback in a down leg. Euro CAD totally sideways. Again, Euro's been nice and strong. Canadian's been nice and strong. Strong against the strong is a sideways. So nothing, literally nothing. Haven't had a trade entry on that one since end of November back there. So dead flat. Range highs and lows. So if we get up to here, be a nice little short, possibly even that. I mean, you got last week's high and the previous week's high, both at 150 ADR, which is also a high from there. So 150 ADR to the upside, you got short opportunity. Downside is obviously somewhere in the region of that monthly low and last month's low. So anywhere 125 to 150 ADR to the downside. So any kind of movement you get up or down, assuming we're going to stay range bound, is fine. Obviously on Thursday, if that happens, don't long it, because it means likely Lagarde is tanking the euro. Euro Swiss, big strong push up there. Swiss franc really, really weak. 2 shorts on this one at the moment off the RSI extensions. So yeah, looking for push down. It's just parabolic at the moment. The Swiss franc's got nothing, so we're waiting for the Swissy just to rally up. When it does, it tends to do stuff like that. Yeah, so when the Swiss franc rallies, it just goes for days and you don't stop it. So it's a waiting game, though. A lot of people don't like trading the Swiss because it does go into weak and strong runs for days and days on end. It's very erratic. But that one, looking for shorts. Euro pound, it's just come down into the monthly lows. So we're getting a lovely limit order bounce at the moment off those lows. I'm long at the minute, looking for a push back up into that propulsion move. In fact, I'm looking for a push up into that propulsion move because I'm expecting some weakness on the pound. So again, sideways for absolutely ages. 1 day movement, sideways. 1 day movement. Not doing anything. This thing is also costing me an absolute fortune in swaps. I've been in this now since basically 3rd of January, first day back, got in euro pound long. Hasn't gone anywhere. We have moved the whole of this month. We have moved 47 pips, 1.5 ADR. Just dead as a door now. Nothing happening. We looked at euro yen, euro New Zealand, euro rallying against New Zealand dollar, a little bit weak at the moment. Coming up to a nice gap fill opportunity there. So shorts on that one as well. Same as the euro odd basically, but as you can see, really, really rangy at the moment, apart from this lovely little break we had over the last week. But it's gone back into a range again. So at the minute, it's almost as if you just want to, every time you get to a high, just short it and get out really fast. Every time you get to a low, just long it and get out really fast. Just we're sitting in these things for days and days on end at the moment. It's just painful. But no signals on it to get in. Had a long there last month. Actually, I didn't take that one because I'd stopped trading on the run up to Christmas. So, but you would have had that. Apart from that, it's dead. Dead. Even on that rally there, look, for kind of, it's the way rallies are happening, which is why we're not getting the extensions at the moment, because they're happening like that. And then they reset themselves, and then they happen like that, and they reset themselves. So you don't get that multi-day push, which we get the pullbacks on. Just not getting those pushes at the moment. They will come. Well, we have had them because obviously exposure's decent at the moment, but we haven't had the pullbacks yet. Euro US dollar. So first long taken on this one last week on the extension. We haven't gone anywhere. Again, total sideways. Stuck, looking for targets in that propulsion gap. A couple of trades on this one at the end of December and into January. So just stuck waiting at the minute, looking for a push up into propulsion, as I say. But we are 5 days sideways at the moment. This is the FOMC rate stabilization from last month, from December. It's just not going anywhere. We've had some news which has caused volatility, but nothing else. So at the moment, this is basically the US weakening on the back of flat interest rates, which is what I'm saying about Friday, about this week with the Canadian dollar and the euro. We're anticipating the interest rates to stay the same. That will tend to weaken the currency, because if it's not going up, there's only one way for it to go down. So the market tends to put more into the short side. So this is obviously that happening, but that's holding at the moment. So fingers crossed we can get a little push up to there. I'd like to be out of everything US. Well, it's not going to happen, but I'd like to be out of everything US by the time the Canadian dollar interest rate is announced, because obviously that has got the potential to move the US. So, but yeah, not far. I just need an ADR push basically on this one. Pound odd. So pound's been rallying against the Australian dollar. There was an entry on this one and exit last week. Nice and easy, in and out and done. That's the only trade that we've had on it. We're out of the highs now on these monthlies, but it did reject. So we've just basically tested these highs. Probably include that one in it as well. We rallied through it on that news. So that news there was the pound CPI, wasn't it, last week? Losing track. It was a week before. Yeah, no, sorry, it's pound CPI from Wednesday, wasn't it? Inflation went up. And as I said, there isn't a reason for that move. Just because inflation's gone up doesn't mean interest rates are going up. It just means inflation's bounced, which is what they said it would do on its way down. So all it is an as expected result. That's a knee-jerk reaction. And I said, watch for all of these pounds to get back and fill that gap, which they did, which is why we shorted. So, yeah. But whether it comes down or goes up from here is going to depend on what happens from here. I would suspect more like that for the pound, because CPI's gone up. So what are we expecting next? CPI to drop. So no reason why that should rally anymore. Pound CAD kind of pulling back on a down leg at the moment. Not going anywhere. No relative strength anywhere on this. Again, strong currency against a strong currency. No movement. Again, that pound move from last week. Exactly back to where I said it was likely to come. Just fill that propulsion gap. That was not a legitimate move. Took 3 days to undo it. Pound Swiss. This one hasn't, obviously. So this is a good example of what happens when you've got a currency that is strong on the back of a news event, and then you have another currency, and as that currency weakens, the other currency weakens more. So all this is telling you is that when the pound was weakening, the Swiss franc was weakening more than the pound, and these two guys have just been sitting in equilibrium, weakening as much as each other for the last 2 days. Still potentially could get back down to there on some weak news or some strong Swiss. We're just getting a reversal alert in the next 15 minutes. So when this hourly candle closes, if it's a bear candle, you've got your reversal alert triggering there. You had a reversal alert trigger on this one here on Friday. And then basically we didn't go anywhere off the back of that one. This morning we've just pushed up and validated that high. So this is the second reversal alert. So it looks like you're going to get an alert in pretty much the same spot as I've got that one there. So looking for a push back down to fill that propulsion gap. Obviously, depending on what profit I've got, if and when we get that drop, I may not hold it all the way down to there. Depends what the portfolio is doing. It depends what news we've got coming up as well. Pound yen we've looked at. Pound New Zealand, I'm shorts on as well. Again, nice reversal alert, a nice retest, but again, not going anywhere at the moment so far. We've had a little bit of a rally or weakness on the New Zealand dollar this morning. 3 positions on this one, looking for a propulsion gap fill. But again, weak New Zealand dollar as well. Hasn't helped that one. And pound US totally sideways. This thing's just stuck, totally stuck. You see, I had a short on it there from that H1. I had a long on it there from that H1. Just stuck. But the propulsion move, interestingly, is holding. But we're stuck. So sideways, nothing. And the pound, sell that area, buy this area is all I'm looking at. And I want to get there fast and hard so that we get an RSI extension. It's just stuck in a minute. Pound US. By the way, I saw a video on your friend Nick Sean's channel interviewing a fella who essentially doing mean reversion position trading, but only on one currency. Just using price action. Nothing wrong with that. Although I would say if he's on one currency and he picks the currency that goes into a squeeze for 3 months, he's dead. And also, so let's say you just picked pound yen to do position trading on in one direction. So how did you pay yourself in January so far? What if this thing goes sideways now until the 30th of January? What are you going to do? Not pay the bills? Can't trade one currency. He will fail. Not make a living out of one currency. If it doesn't move, you don't get paid. This is why you have to trade a portfolio, because you can't just rely on one thing paying you. It just doesn't work that way. But yeah, everybody's going to come to this conclusion eventually once they've watched the bootcamp. When you watch the bootcamp, somebody said this to me actually ages and ages ago. It was like, it was somebody that was in my Zoom classes, so it was 2.5 years ago or so. And he's one of these people that was very, very active in the group, in Telegram, all the time. And then he just sort of disappeared and never heard anything from him. And he basically went off because he got into a squeeze, he got into trouble, he had a losing month, and he had a bad month again. And it got to a point where it was like, no, this doesn't work. So he went off and he came back after 3-4 months or so, I'd say probably. And he said to me, I went off because I had a bad experience. So basically he had got to this stage on the 5 steps to becoming profitable. So he basically found position trading, got here, made a load of money out of it. Market kicked his ass for 2 months. He stopped back. He went back to here. Yeah. And then he came back after 3 or 4 months, got the eureka moment again. And he said, basically every strategy, he went off strategy hopping as you do. When the strategy doesn't work for you, you go off and find another one because this one doesn't work. So we'll go and find the one that does, which you never can find because none of them work. So, but he went off and he came back and he said, do you know what? Every single strategy I looked at, first thing I did when I looked at that strategy, I tried to turn it into a position trading strategy. Because once you've watched the bootcamp and once you've learned what's in the bootcamp, you can't unlearn it. But every strategy you look at from now on, you'll be looking at it going, wow, that looks like a really good, easy strategy. I wonder how I can turn that into position trading so it doesn't lose. Can't get that out of your head once it's in there. It's interesting you said that. It said that they'd come to the conclusion that position trading is the way to go, but doing it in a completely different way. Position trading, as I keep saying, is a methodology. It's a way of trading. It's like hedging, stop loss trading, position trading, portfolio trading, investment trading. They're different ways of trading, and you'll have different risks and ways of doing it associated with them. But they can be applied to any strategy. Yeah, if you do support and resistance bounces, you can use a stop loss. You can also use support and resistance bounces with a hedging strategy. You can also use support and resistance bounces with a position trading strategy. Yeah, it's still a support and resistance bounce. And as I keep saying, doesn't matter how you get in, does it? It's irrelevant how you get in, because when you get into every trade, the odds are the same. It's 50%. It's either going up, it's going down. You have no control over that at all. What happens after is what we do as traders to make money. So it's interesting. He obviously didn't listen to the bit that I said in the bootcamp about you can't make money out of one instrument. You need a portfolio. It's a portfolio approach, because if one instrument you get into, like, for example, the CAD Swiss I got into and it's gone sideways for X number of weeks. That hasn't the CAD Swiss, but if you get into something that goes sideways for 6 weeks, you can't make money. However, all the other stuff goes down there. But the CAD Swiss doesn't. Look at the pound yen. Pound yen I haven't made money out of. But still up 2.6% on the account. But if I was a pound yen trader, I'm dead. but I'm not. I'm a portfolio trader. So, but it's interesting. You won't. When you watch the bootcamp, you can't forget it because it puts it. Everything I say everything I say is logical. Everything everybody else says, you can get a Lambo off, but you haven't got a Lambo. So surely your brain has to say, well, I've done this for 6 years and I haven't found anything that's got me the Lambo. Yet this guy's done this for 2 years live using this strategy and he's always making money, but he hasn't got a Lambo either. Therefore, the conclusion should be, I can't have a Lambo, but this is how the market moves and how I should trade it. Go find a strategy that works for you. Don't use mine. Use anything. All strategies work if you remove the stop. Basically, that's it. I'm not saying I'm the best trader in the world. And no one is a good trader. You are a lucky trader. You will press a button. It either goes up or down. That's not good. That's luck. You can be a monthly resistance trader, right? But if your TP is there and your TP is there, both of you monthly resistance traders have got a different result. That guy is out. This guy is in a trade. If this goes up here now, this guy has got to manage his position. This guy is waiting for another opportunity on another pair. They both did the same thing at the same level, regardless of whether they used a stop or not. It's down to what happens after the position is entered. Doesn't matter how you get in. So yeah. But you find a lot of people going off doing what I do. But it's not doing what I do. It's just doing what everybody that makes money does. There's a lot of people out there making money, but there's very few people out there making money with stop losses. A lot of position traders out there. Most of them doing it under the radar because, and a lot of them, I'm sure, doing it because they've watched what I've done over the last sort of 3, 4, 5 years. The original Bootcamp came out before COVID. It's over 4 years ago. So there's a lot of people learned it by now, haven't they? Morning, Astro. Outro even. 1-1. Astro's in the afternoon. Got an exam today, so decided to opt for an extra hour in bed. Lots of people got exams at the moment. Whipping posts. He's not doing mean reversion. He's basically playing support resistance, trading in the direction of the market. But position trading if it mean reverts pullbacks. I mean, the only downside to position trading resistance is you can hit resistance with the RSI there. Then you can take a 4-day ADR hit against you before you get an RSI extension. So I get in 4 days later than you. That's the only downside to support and resistance. Because there's no stretch when you get there. There's no stretch there. There wasn't, actually, in this case, there was. The ideal strategy would be support resistance trades on RSI extensions, but then you wouldn't have taken that one, which is fine. But if it had gone down from there and hadn't hit that, you'd be cross. You're never going to get it right. You can't get, this is the whole point, isn't it? You can't time the entry. If we could time the entry, we knew where it was going to turn, we'd just do that, wouldn't we? And nobody would ever go into drawdown. No one would ever lose money, and we'd all be millionaires. Therefore, money would be pointless, and we'd be living in the Star Trek world. So someone needs to invent the replicator, as far as I'm concerned, then we can all just go off and not need to earn money. Financial markets exam. Not as fun as trading the opens. Working out bond yields, etc. Yeah. Not for me. Where did I get to? New Zealand. New Zealand dollar CAD dropping. Just quickly check what the indices are up to. Nothing. We haven't moved. New Zealand dollar CAD. So yeah, we had that breakout. New Zealand dollar CAD weakness. New Zealand weakness, CAD strength at the same time. So we've had this little bit of a drop. Difficult to tell where this one's heading really. We've got the propulsion move from FOMC. That's from the previous Canadian, isn't it? No. What's that? November. I just can't quite remember what that one was. November the 14th. Calendly. That was a CPI. That was a US CPI. You see how the US CPI affects Canadian dollar. Yeah, CAD moves with the US. So any CAD news, any US news, it all goes the same way together. So we are just coming back down to retest this area at the moment. If this is still, I mean, the market conditions where we were in November and where we are now are different places. So we're just dropping. The thing about this one is it's so orderly. This is why we use RSI. We don't want to get into something that is just trending down nice and orderly. We want to get into something that's stretched out so that they've got to get out of some of the position. Yeah, this is why RSI is used. So just dropping at the moment. Where it's going, nobody knows. We'll have to wait and see. New Zealand dollar Swiss, total sideways. New Zealand dollar weak, Swiss franc weak. Again, buy the lows, sell the highs until you get a breakout. Hopefully it won't be the one that you sell or you buy, but nowhere at the moment. New Zealand dollar yen we've covered. New Zealand US, same as the New Zealand CAD. Got two on this on the RSI extension from last week. So first entry was there. Second entry was down in there on Friday. So yeah, waiting for a push back up into propulsion, looking for these areas to get retested. Again, this one I'm going to see where we are. If we are kind of sitting around here Wednesday, or anytime really, I'll probably take it off. Just because obviously the Canadian news is coming out this week and I want to be out. When's our first US news? Richmond. Yeah, it's CAD. CAD is the first US news, and that's the PMIs as well for the US, all coming out at the same time, 2:45. So that is going to be a difficult open on Wednesday for the US session. US dollar, one on that from last week. But again, same thing with this one. It's like a day of push, not going anywhere for a while. A couple of days of push, stuck. But again, FOMC, interest rate freeze, propulsion holding. Yeah, they are still short the US. So, or wanting to short the US. Nobody's got any balls enough to buy much at the moment because everybody's going to be dropping their interest rates, which means that currency is going to devalue. So it's very hard. It's kind of like when you're playing pairs at the moment, you're like, who's going to drop first? If you think the US is going to drop before the CAD, short it. If you think the US is going to drop after the CAD drops, you want to long it. Whoever drops first is going. So, but no one said they're going to do it before March. So, you know, we're all sitting here just trying to see if we can get into and out of positions before they make the interest rate announcement, or they announce that they have got a date for an interest rate announcement. That's as bad as having the interest rate announcement. As soon as somebody says in March, we are 70% sure we're dropping interest rates, market's going to go, those interest rates are dropping, and that is gone. So this is why we need to pay attention to the news. As soon as you hear about it, it's as good as it happening. When it happens, it's even worse. So just a case of waiting. US dollar Swiss, shorts on this one as well. So again, Swiss franc weakness, looking for that to unravel. Targets to the downside on this one, just looking for this reversal alert, which basically we broke out of in quite an orderly fashion. We've got the initial move back up to FOMC. So there is still upside on this one, potentially, but we'll see. The Swiss franc and the US obviously flat there. So hopefully we get some Swiss franc strength coming through. We've had a week of weakness, so hopefully we get a little bit of strength. And the US dollar yen we've looked at already. Short, big short. Have been in short since the beginning of January. Just need 1.5 ADR drop. It's just not getting it. It's just, at the moment, we're not getting it. I've taken a bit of profit out of this one already, and added that one back on again as it pushed up, but just haven't had any opportunities to get out of any of these. So, month from hell, January, so far. Well, not the month from hell, just difficult. Euro Swiss is moving quite nicely. Potential to get out of that one today. Why is that spread so massive? 4 pip spread on Euro Swiss. Thanks, Robo. Oh. Pound CAD sales. It's triggered one of my sales. Look, it's triggered one of my exits and not the other. Look. Oh, thanks very much. So out of that one, but they decided not to get me out of that one because of the spread. Look, I'm just going to close that out, that pound CAD, because that should have triggered down there, but that's annoying. So long now in pound CAD, 0.5% banked from the day. So we've had the reversal alert long. This is potentially the retest. So I'll look to get out of this one. Up in propulsion somewhere. Is that 50? It's not very far, is it? I'll go for the highs. After watching the bootcamp, I zoomed out to look at FX weekly charts and realized it's been in a range for decades. So if you're sizing your positions right on the hourly, you can't lose. Not really. Fib in the middle of nowhere, look. I mean, that's a long time though. If you look, I mean, that's like, so August 2017 to March 2018. So it's 6 months of rallying. But look in between, look in that. Nothing goes in a straight line. That one did. That one did. But these are weeks, you know, in all of these weeks. This is the thing with the weekly chart. You only need one down week in a rally and you're out. As in, you know, this is why we focus on ADR. This is why the focus of position trading is on average daily range, because that is what we know happens. We know that the market spends time within its average daily range. So for me, it's easy to know how to get out of something. So if this drops by an ADR into there, I need 1 3/4 ADR. So I need 2 down days in a week. This thing has got 5 days in a week. If it's going to put in a bull week, it can go bull, bear, bear, bull, bull, and that's a bull week. But if I get 2 down days of ADR in that week, I can get out of this and it can still finish bullish. So the weekly candle will be a bull candle. But inside that weekly bull candle, you'll have 2 down days of ADR, which gave you a massive profit on an H1 M5 mean reversion. On the weekly candlestick, it's a huge bull day, bull week. Perspective. This is why you have to stick to timeframes. If you are an H1 M5 trader, you're an H1 M5 trader. What's going on the weekly chart is irrelevant. Yeah. You need to know about levels, but other than that, timeframes don't really affect each other. The market's a fractal. So everything that happens on the bigger timeframes happens on the smaller timeframes just a lot quicker. So the lower the timeframe you go, the more crap you've got going on, the less reliable it is. If you trade weekly charts only, you will be a very, very successful trader. But you've only got 52 candles in a year. As we know, you could be sitting there waiting. That reversal alert there took 17 candles. Imagine waiting 17 weeks for a reversal alert and then knowing damn well you might have another 10 to 15 weeks of a pullback to create that W pattern. Yeah, so by the time you had a confirmation on that reversal alert there, which is that candle retesting and then pushing back up again, it's 23 weeks. It's half a year. Not my fun time frame. I can't wait that long. That'd be nuts. Right, market's pushing down. So downside target. So we're just about to do gap fill on the DAX. Look, 166.35 is gap fill on the DAX. Basically that propulsion gap. So if you're brave, you could try and exit on the 2-hour bounce. Not a lot of volume today. But if that gap is not going to be honored and they're not interested, and they continue to drop, you're much safer getting out down here. However, if it bounces from there, locked in hedge, nothing you can do about it. These are the decisions you've got to make. But not a lot of volume today again. Struggling at the moment. And again, you need to be aware of obviously what's coming with the earnings. Yeah, the market is not going to want to put a load of stock sector purchases in the day before earnings fortnight kicks off as well. So might be a bit of a weak day today. Should really have thought about that in advance, but you never know. This is the beauty of the opening range breakout strategy. You only need 5 or 10 minutes of volume, and that's it. It's done, isn't it? You're done for the day. So, but didn't get it today. Right, that's all I got for you this morning. I'm going to go off and research some more of this MT5 issue that everybody's got that I can't do anything about. There's a thread someone's posted in the Telegram group with a link to. This is the forum basically that I posted about where this problem has been reported. The build 4150 update. Everybody's having the same problem. You can also downgrade your MT5 terminal. There is a Telegram group where if you've got this problem with MT5, there is a Telegram group that you can download previous versions of MT5. But some brokers are terminal version specific. So if you downgrade your MT5 terminal, sometimes your broker won't connect to the terminal. Not a great solution to try and backpedal. And obviously bear in mind when you do that, MT5 is going to try and update itself. Somebody's RSI look. That looks like a data issue. These are only the people that are talking about it, so it's a widespread issue. As you can see, us MT4ers, just going to carry on working. Excuse me. I don't understand the prior close on the DAX was 165.55. Depends on your broker, whether you're watching futures or CFDs. Trade your charts, not mine, Wayne. Everybody's charts are different. You trade what you see. My close on Friday with my broker, Darwin X, was 166.34. The futures market will have closed at a different price. CFD market on my broker, on the time that my broker closes my candlesticks, which is 10 o'clock, was there. So, trade your charts. One of my mentors that I had always used to say that. Trade your charts, not mine. Everybody's charts are different. Trade what you see, not what I see. Doesn't matter what I see, does it? If you see a gap fill at 165.55, which is all the way down there, basically where my TP is pretty much. If you see a gap fill there, trade it down to there. This is what I see, though. I can only trade what I see. And I see gaps getting filled, and I see liquidity bounces out of gaps. Yeah, you say it's the official close of what? By who? The official close of the futures market is nothing to do with a broker's CFD price. So if you're trading futures, you shouldn't be looking at a chart. If you're trading CFDs, you shouldn't be looking at the futures chart. If you're trading futures with your broker, though, yes, German cash market, totally different to CFD. If you're trading futures with your broker, that's what I mean. You trade your charts. You trade what you see. You're going to see something different. If you're trading in the futures market now, your chart doesn't look like this at all. You shouldn't be. You should be trading that chart, which is absolutely fine. There's nothing wrong with it. The odds are still the same. When it hits a level that you think, oh, that looks where that is, then you press that button. The odds are still 50-50. What you do afterwards is up to you. But the odds are the same. I got somebody at the moment that's contacted me, or not contacted me. They have contacted me, but we've got people posting set files in the Telegram group, which is great for the stock index Hedge EA, and people post set files every now and again for all sorts of things. People grab those set files, they put it in their MT4, MT5 terminal, and they get a totally different result. Yeah. And that is because the data they have is different to the data that you have. Yeah. So you're going to get a totally different result. If your broker has a spread of 5 and my broker has a spread of 2 for the entire year, I will get a result that goes like that on my P&L, and your P&L will go like that because you've curve fit your back test to your broker. My broker has something different. So my answer is always the same to everybody that says, why do I get different results? Forget everybody else's results. You trade your results. You trade your charts. You back test on your system and you trust your results. At the end of the day, everything you do in a back tester is down to the data. That is the most important thing in any testing. Strategy is irrelevant if your data is wrong. Yeah. If I backtest on Dukascopy data and Dukascopy closes their candles at 9 o'clock and my broker closes his candles at 10 o'clock, if I do my backtesting on 9 o'clock candle closes, the result on my broker is going to be totally different. ADR will be different. End of day close will be different. Everything will be different. The gap will be in a different place. Everything's different. So you have to download your own data, verify that data, make sure you're happy with that data. Does that data match up exactly with the candlesticks that are shown on your broker's chart? Easy to do. You do a back test. If you're using Tick Data Suite, it's really easy to do because all you do is you do a test using tick data in visual mode. Yeah, let it run for a few days, stop the chart, same time period, don't use tick data mode. That will now use your broker data, put the charts side by side. Are the candles exactly the same? Yeah, then the data from that Dukascopy in there is the same as my broker. So I can trust that whatever results I get there, I would have got on my broker, minus spread variation, which will make a massive difference in every backtest you do as well. But all you can do is use your data. If somebody says, I've got amazing results, here they are, with the stock index Hedge EA, tested over X number of years, brilliant. Verify it. If you get a different result, scrap it, run away. Who's to say that their data's right? Who's to say that you are not the person? So the person that's contacting me in Telegram says that he gets totally different results. So I turn around to him and say, well, yeah, your data's probably right. His is probably wrong. I hadn't thought about that. His data was right as far as the person's concerned. You've got to do this yourself. Don't trust anything I put out there because I've tested stuff. Who's to say that I'm not 100% wrong with everything I've tested? Do it yourself. Test it yourself. Learn to do it yourself. Don't trust anybody in this industry, me included. Yeah, I'm one guy sitting here that could have it all completely wrong. I've had it right for the last couple of years, but doesn't mean anything, does it? This is what I'm trying to say. You have to do this yourself. You have to put the hours in to test it. Every chart is going to be different. If you trade futures market, you're different to trading CFDs. If you trade the CFD for cash, you're trading different to the CFD that isn't cash. Yeah, there's different types of CFD as well. Dukascopy data will show you that. There's multiple data streams for the DAX, all showing different prices. Which one do you choose? I don't know. The one that closest fits the one that you see on your chart with your broker, because this is where you're trading. So you need to match the data to this. You do a back test and the candles look like this on the data and the candles look like this on your broker, you cannot use that data because you're not going to get the same results, are you? So any set file you ever get for any EA, including mine, anybody's EAs out there, when you put it in the backtester, first of all, guarantee your data matches your brokers. If it doesn't, you need to make sure you find some data that does. With Tick Data Suite, this is one of the reasons I love Tick Data Suite and I go on about using it, because it is accurate data, but it's accurate data from all of these guys. If you trade with FXCM, you download FXCM data, you know that you are backtesting on the exact data that you would have traded. If you are with Alpari and you are backtesting with Robo Forex data, you're going to get different results. Yeah. So look at the difference between Alpari ECN1 and Alpari MT5 and Alpari Nano and Alpari Pro. All of these will have the same instrument, different data feeds, different prices quoted, which is why I keep saying over and over again, everything you do in here gives you a rough idea of whether there's a possible edge that might play out in the future, but none of that information is any use to you because it's happened in the past and it's not going to happen in the future. And it's never going to be 100% accurate. Even if it says 99.9% accuracy, all that means is you've got 99.9% of the ticks that happened during that period in your data stream. Whether they are any way, shape or form the same as what your candles would have been when you traded it live because of spread and variations at news events, which will throw out ADR and all sorts of stuff, none of it's going to be right. Can't be. So system parameter permutation testing is what this thing's used for. Can I, with the RSI, sell it when it gets over 80? Yes? Okay. So let's say, for example, my broker didn't hit 80. Let's test 85, 4, 3, 2, 1, and 79, 8, 7, 6, and 5. If I'd have taken a trade at any point around there, would I have made money in the past? Yes. Excellent. Now, let's take a different time period where the market was way more volatile. Would I have still made money? Yes. Excellent. What's that give you? An edge. Is any of that data to be trusted? It's going to happen again in the future. But it tells you that if you sold the RSI somewhere between 75 and 85, there's a high probability that price would have come down. That's all you're ever going to get from a backtest. Rough. Even with 99% accuracy, it's rough. So don't ever expect to put someone else's set file in your account and get the same result. Not going to happen. I've done the same. I've got these on my... These from have been sent to me by people. They're backtests. Yeah. I can't produce these backtests. I put this into my account. I do not get that. I get a totally different result. Same EA, same settings, same period of time. I've got 99.9% accuracy on my data. I don't get the same results. So always trade your charts, always trade your data, but do your own due diligence. Don't trust other people. Saying that, most of my stuff works. All my stuff works. It's just that you can't use it on auto all the time, like I keep saying. Thanks for the live. I've only just found you and I trade a similar way. Good to see it working. Good. Right. I'll be back this afternoon, 2:20 for New York. No news today. Dead. So whatever market movement we get is just bank orders. So we'll see what happens. But at the moment, obviously, indices are bearish, but not particularly exciting. There's no ADRs and there's only CAD Swiss on the RSI. So literally nothing much at the moment so far. Today is moving, right? So back tomorrow morning, 7:50 for Frankfurt. Back this afternoon for New York. And I need to get some, because I haven't got any money in my account now to trade this afternoon for New York. So I need to figure that out. So this afternoon, I may or may not be trading the indices, but we'll watch them anyway, regardless whether I trade them or not. So, all right, have a good day. Anything you need, let me know in Telegram. Other than that, I will see you guys next time. Have a good one.